I don't know. Do you believe what the markets are doing?
I mean, it feels like we're in the midst of summer. I think most people kind of feel, personally, things slow down sometimes during the summer. People take vacations and other things. It
Is
feels
that
kind of like
driving
the
the
market.
market higher though?
Yeah, but it feels like the market's just kind of, it's slow, right? It's not. It's slowly going up is perfectly fine. It just feels like there's not a lot of news,
Yeah.
not a lot of things moving the markets. It feels like summertime, which happens in the market as well because even in like New York, they kind of joke too that a lot of the traders end up leaving. Volume goes down. It's more quiet. It
Yeah.
feels like that right
Well,
now.
it's the old saying: markets takes the elevator down and the stairs up, and this has
Right.
definitely been the stairs. I don't think anybody believes it. Let's dig in and take a look. Let's do a little bit of a market recap here, which is starting how we usually do when we start the Casual Friday webcast. If you're listening to this on the Financial Insights podcast, welcome. I'd say if you're listening, subscribe. If you're watching, also subscribe. We do the webcast twice a month, every other week. Generally, despite our summer schedules, we try and keep to that. And then, of course, with the Financial Insights podcast, we'll cut the audio from this, put it on there, and then we try and post to that weekly. So you oftentimes in between these longer episodes, we have some shorter recaps or some kind of targeted subject matter. But we are starting today with a market recap. Ryan, in the last let's say 5 days, believe it or not, as we record this on 7-Eleven day, where we can go get free Slurpees, the only index that's up is the Russell 2000 over the last 5 days. S&P down,
which has been one of the indices that's been a little bit slower overall this year.
Yeah, I mean, don't get me wrong. Over the last month, the Nasdaq's up more than 4%. S&P's up more than about 3 1/3. So it hasn't been bad. It's just the last 5 days, maybe even kind of a little bit of a fallout. The last, we had a shortened trading week last week, right?
We had the jobs report come out too, which kind of shuffled things around. People got a little bit scared that the numbers were too good. Maybe the Fed's going to have to do something about that in reaction to it. So that's definitely was a down day with the good news from the jobs report.
Well, and the Fed said as much, right? With it, we're hearing more and more 2 rate increases, 0.25% each coming. I think more and more folks are starting to believe that rate cuts are going to come rate cuts aren't coming just because inflation's coming down, right? Rate cuts will happen because we're battling a recession. Unemployment is starting to go up. They keep talking about the tight labor market being the problem. But the market keeps drifting higher, like you said, despite all of this.
Right. I don't think that there's been a major bad news. I think sometimes too with interest rates on the Federal Reserve, the story's getting a little bit old, right? Like it's been the key thing that we've been focused on for over a year now. I think sometimes you get fatigued to where that story is still relevant, although I do think we're towards the tail end of it. That people are kind of putting it on the back burner.
Yep.
But we don't really have another news story, and definitely not another negative news story at this point, which is driving the markets. Earlier was, in March it was bank failures. It became the debt ceiling issues. There's nothing that we're facing right now that is going to drive volatility, and that's why I do think the markets have been a little quieter and can head upwards.
Well, I mean, how many old sayings do we want to use in one episode? Markets climb a wall of worry. That's pretty well documented. And so if we're worried about inflation and interest rates, markets can keep climbing higher despite that. I think the disbelief in what markets have been up to here just in the last couple of months and even year to date, because keep in mind the Nasdaq's up more than 38% year to date. S&P's up more than 15% year to date. Is that the technicals show that the path of least resistance from here is higher. Right. So in the shorter term, I think there's still some gains to be made. Even when you don't think it's going to happen, like we started to see it unravel last year. Here we go again. Markets moving higher this week. But if you're looking at fundamentals, the valuations are stretched. PEs are starting to get one standard deviation. The forward PEs starting to get one standard deviation. above the historical
itself.
average, which usually causes a correction. I don't think there's any doubt that it takes a long time for interest rates to seep into the effects of higher interest rates to seep into the economy. Rates, I'm not saying this is 2008, but rates were being hiked in 2006 and the effect wasn't felt until, 14 or 18 months later. There still could be some pain in front of us, even though the going right now, I guess clouds on the horizon, right? Where the
again, I keep saying it's quiet, but it only takes a little bit of a negative news story to come in to pop the momentum, stop the momentum of the market going upwards. Yep. And sometimes too, we've always seen this, the market gets on a run, it goes up, 10% in a short period of time. You almost feel as if inevitably we needed some kind of small correction, not something that needs to wipe away all the gains that we've had, but it needs to calm itself down again before coming back up.
Yeah, well, and we had this S&P get almost back to break even in March when the Silicon Valley Bank stuff was going on, and so that kind of crisis caused an entire reset. So the S&P is up quite a bit, but really it's up since March, not necessarily since January, because the January and February gains we gave back in its entirety. So
right.
I guess wait and see. If you're a long-term investor, good news. If you're intermediate term, maybe stay tuned. And if you're really short-term for some weird reason, hopefully you're not too bearish because you've been getting killed if you are. I think that's where we can summarize things at the moment. Hopefully it doesn't change all that much in the next 2 weeks until we do this again. Let's dig in and do some charts. You've got an interesting one. I'll add it here. This is another one from the Visual Capitalist, which is something that we reviewed last time we did this. You want to run through, this is a longer chart, so we'll scroll through this a little bit.
Yeah, we'll scroll through this. Basically, this is just trying to visualize the size in which each company represents an S&P 500. So just a quick recap. S&P 500 is the 500 largest companies, but the way that they weight the companies is by their market cap, which is the price of their stock times the amount of shares that are out there. So you're going to see that the biggest representations are going to be very, very familiar names. Not surprising, if they're familiar names, that means we're using them. It means that they have a big presence inside the investment world. So they broke this down by sector and then put each of the companies that represent the biggest piece in those sectors there. You will see that information technology at the very top, which is in blue, is now the most important sector. I don't think that this surprises anyone. Technology, we use Microsoft, we use Apple, AMD chips. You see IBM's in there. NVIDIA is probably one.
This is not an endorsement or an offer to sell or buy any of these names, right? We're just talking about the makeup of the S&P 500.
Yeah,
this is not rendering an opinion on any of these companies and their investability or how well it might fit into a person's portfolio.
No, it's just purely, the way the sizing of these companies are and the representation that they make up in the S&P 500, which is relevant to a lot of people because, this is how the S&P is made up. And this is probably the index that we all tend to follow.
Right.
So here's a few interesting things, especially with the technology sector. You kind of scroll through some of these different sectors. And if you go to, say, consumer discretionary, which is that purple,
yep.
You see Amazon in there, you see Tesla. Most people kind of associate those with like kind of technology. I know Amazon really are selling goods and delivering them, but we still kind of think of them as technology related. Your communication services sector, which is that pinkish circle. You have Google and then Meta.
Nobody
Netflix.
Thinks of Google and Meta /Facebook, Alphabet /Google or Meta /Facebook as being communication services companies. I think.
Yeah.
We
kind of
just mega cap techs in together and.
Yeah, we kind of lump sum them and think of them as technology companies, but it's just interesting because this is ever evolving, right? The companies in here are constantly changing. 20 years ago, some of the largest companies inside of the S&P 500 were Walmart, General Motors, Exxon, Ford Motors, General Electric, Citigroup, Chevron, IBM, and Verizon. So Not that those companies are small these days. I
No,
mean,
but even you can even see here in the Visual Capitalist even kind of identifies it here in this highlight in the middle. The S&P 500 index originated in the late 50s and was 425 industrial names,
yes.
50 utilities, and 25 railroad companies. So things have changed quite a bit from its inception in 1957.
Yeah.
Real estate wasn't even in here until 2016. I was surprised by that.
Right, because you would think that it makes up a big portion of the market. Yep. And one of the interesting things about technology, I think, again, we're not surprised that technology represents such a large portion, given how much we use it, how much we rely on it. But surprisingly enough, it's actually the big point at which it was the biggest weighting inside of the S&P 500 was during the dot-com burst. And so that's not technically surprising because we had such a large run-up during that period.
Sure.
But it at that point, it was almost 30% of the entire S&P 500. And right now it's, hovering in the high.
So let me jump in here saying Amazon is the biggest name in the consumer discretionary sector in the S&P 500. Today is Prime Day, one of the Prime days. Yes. Have you bought any junk from Amazon today that you don't need because it was on sale?
No, thank goodness. Like I maybe, one of the benefits of like being at work right now is that you're not sitting at home just being able to
suckered by these money deals.
Because where you're not on your phone, you don't have all this available time to be going through things that you don't need. And I think I will say I feel like I probably should have waited for some of my purchases in the last few weeks to see if they were discounted, because honestly, it's not just Amazon that has these discounts. Everyone kind of reacts to Amazon. So a lot of
there is a halo effect, right?
Yes.
Best Buy, Walmart, they try and do this counter programming that goes on, which in effect causes this kind of Black Friday treatment by retailers in these dog days of summer.
Well, if you don't participate in the sale today, then you're basically sitting on the sidelines while everyone else is offering something and they're shopping at another store then.
Right. Well, so maybe this, unless you had something else on the chart, this might be a good time to pivot to my chart/charts. I know we try and do a chart each. I have a series of 4 charts, but a theme. And that really is credit cards. And I'm obsessed with this kind of notion that we're being resilient with the consumer is resilient with all this inflation. And I still think I don't want to say ticking time bomb because that's an overstatement, but it's not sustainable. So the first one I've got here is commercial bank interest rates on credit cards. And for, a really long time, credit card rates hovered somewhere between, as low as 12 and about as high as 16.
14 seemed to be kind of an average.
Yeah, you want to call it the median maybe? I don't know, not officially, but it's within that range. Dude, they're north of 22% right now. 22.2% as of May. Like, giddy up. If you're going to get on Prime Day and buy something that's 15% off and put it on your credit card that's charging you 22.2%, forget it. It's not a deal anymore. Yeah, like, give me a break. I suspect that's a lot of what's going on, and people don't realize what's under the hood on that. Consumer credit that's owned and securitized, and you can see, boom, there's a fall off during COVID, and then, it's like a line straight up and to the right. Maybe this is sustainable. I don't see how at rates now north of 20%.
Yeah, I may have said this before on here, just kind of the way that I thought that things have played out, because of COVID. And you see that stark drop down and then it shoots back up. It's obviously, with the lockdowns, we weren't spending money, but we weren't spending money. But then again, you got stimulus money, you got all this, and then you come out of COVID. And with all this pent up, money that you want to spend, you actually go and start living life larger than you normally do. Even pre-COVID, you live like almost like a better life than you had pre-COVID.
I mean, you've been traveling this summer. Like, how's travel been? It's been bananas, right?
Yeah, travel's been busy. I will say it feels like it wasn't as busy as 2021, but that.
Oh, you're cutting out there, Ryan.
I mean, I had a peak. And I feel like it's hard for people to go out and live that better life because they did have money in the bank accounts from stimulus and not spending money for over a year.
Yeah.
And then it's hard to turn it off.
It's
right?
hard to turn it
So
off. But
instead of
then on
turning
top
it
of that,
off,
you're paying $100 for a bag of groceries.
right. Well, and so what do you do? You want to continue living that lifestyle because that's I'm not saying that's the way you should. I'm just saying I feel as if that's what the normal human instinct is.
I
And
don't know.
one way to do it is
This
you go
looks
and
to
use
me
credit
like
cards.
full YOLO. Like,
Yes.
yes, I'm paying crazy amounts of money for like childcare or a new car or on interest on my credit card or whatever it is, but everyone's doing it anyway. And here's the last one I've got for you. And I'll link to the Twitter handles of Visual Capitalist who you used for your charts and the Daily Shot, which is like this daily chart newsletter. You'll see here the handle's actually Sober Look, but this is from the Daily Shot newsletter. This is the share of households relying on credit cards. So getting by on credit cards. And you can see June 2021, 2022, and 2023 is in gold. And then based on households, who's relying on credit cards to get through. And it is everybody. And it is a measure larger than June of 2021 and 2022. Again, this is about trajectory. This isn't even about the balances. It is like, I don't know the sustainability of this.
Yeah. The one interesting thing that eventually may play out though, too, is that if the Fed ends up lowering interest rates, you would expect that the credit card rates would decrease. The interest rates would decrease. I mean, that will help some people, be able to pay them off, hopefully not spend more. that would be the question. But I think, again, this is more of a function of two things. It's a function of inflation, things costing more. People have necessities. They're going to put it on credit card if it's a necessity and they need to buy it. And then the other one is living a lifestyle that's larger than they should be living.
Yeah, but I think they both wind up in the same place, which is at some point, households start to take a look at their finances and say, good gravy, this is out of control. Our balances are high. We're barely making the interest payment. We've got to cut back. Cue recession. Right?
Sure.
If households and consumer spending is getting cut back, that's where it starts. And we say, oh yeah, well, everything's haywire, but the consumer is strong. Or if the consumer is strong, or what's his name from JP Morgan says, if American consumers cut back, they stop spending $100 at Macy's, they start spending $100 at Target or $100 at Walmart. That's true. But if this path of sustainability, or if this unsustainable path, I guess, remains, boy, they're going to go from spending $100 to $50. And that's where the pain's going to come.
Yes.
We'll see. Yes. Maybe I'm wrong. Maybe we parachute money to everybody. And
we're financial planners. We're always going to say credit card debt's a bad thing, regardless.
No doubt. But oh my God, I cannot handle this chart. I cannot handle seeing. Can you imagine paying 22% more on stuff you buy if you're putting on your credit card, not paying it off every month?
Yeah, I mean, also, as we all know, then it becomes this a function of you really can't be paying off your loan, right? Your credit card loan, because that interest rate is so high and you could only afford so much every month. You're paying a lot of it just the interest, and your balance is just sitting there. I mean, and that's what the credit card companies want.
Yep. All right. So it's time. We're going to wrap this up with what's on your mind.
So have you gone to Saizon yet?
Yes.
Okay.
Yes. So it was like seafood. I mean, if you're into seafood, cool. Well, I'll let you.
Yeah, it is a lot of seafood. They describe it as like Napa meets Mexican food, right? And so it's kind of a fusion of the two. It's funny because we're going there on Friday. My wife, usually what she does is when we get done eating, she'll make reservations for the next time, because they are the one restaurant that I could think of in Fresno, maybe the only restaurant I could think of in Fresno, that if you want to go there, you need to make a reservation like months in advance, right? I don't think there is another restaurant there, but it's a unique place. It feels very Los Angeles vibe.
Yes.
It has a very nice decor to it that's different for Fresno. The food's good.
Yeah, it's a good here.
Yeah, no, I was just mentioning. I just felt like,
here's the website. I will say so. So we went, yes. Although Annex is the same way. Fresno is not as tiny of a town where you can just go out on a Friday and get a place to eat.
No, but it was funny because my wife makes these reservations partially because she'll make it for 4, and then we'll randomly just kind of invite some people. Like my aunt and uncle are in town, so we're gonna have dinner with them. But I had told my aunt and uncle in Texas, said, yeah, we had made reservations like a month ago. My wife was like, no, I have to make reservations 2 months in advance to be able to get a reservation. I'm like,
yep.
It's a long period of time, but a very good restaurant.
It is. It's a great restaurant. We went. I think we had reservations a month in advance, and I'm sure in bigger cities you need to go further out. But we started with oysters on the half shell, and we had crab tostada things. We even had caviar.
Yeah. Okay. It is a lot of seafood.
Yeah, and my wife doesn't like seafood, but she stepped down a limb and found stuff that was fish and crab and shrimp and stuff that she loved. And so I will say the food was fantastic. I'm friends with a couple of the owners. I would say the cocktails are okay and getting better. For cocktail, I wouldn't go there just for cocktails. I'll put it that way. I'm going there for the food. And it is nice recommendation. Good choice. Yeah. I've only been once. How many times have you gone?
3 or 4 times. So it'll be like 4th or 5th time. This Friday.
Well, that's pretty good. So I've got a couple things I'm thinking about. One of the things was here. I'm trying to look here. One of the things that we talked about last time was the kids' debit cards that we had done. They finally came in. I'm in the process of activating them, so I haven't been able to fully flesh this out to check back in to let everybody know the verdict on this. I've got 2 things. One of the things that caught my eye today was B of A pulling a Wells Fargo and paying over 250 million over wrongful fees is like, that's a drop in the bucket of B of A. But if you look, Bank of America was opening credit card accounts for customers without their consent and double charging fees. So straight up like Wells Fargo, except this time it's B of A.
It's funny why they have such a bad perception in the public, banks in general, when news stories like these hit.
Yes.
No surprise.
Yeah. It's, I don't know. I wouldn't want to bank or invest with firms that are hooked up with those big ones with whatever. I'm not saying that you bail on them or other firms associated, but I mean, this is kind of what you get when you're dealing with the big boys. I will say Bank of America, if you read through the article, Bank of America isn't being penalized as much because they spotted this earlier and started to rectify it before getting busted, essentially. But still, they did what they did, The other thing, this was just today's news, so this is what caught my mind. But the other thing is I am reading now Tom Papa's book. He's a comedian. He's got Netflix specials. He's really funny. I like him a lot of dad jokes and humor. No, he's not dad jokes. They're funnier jokes than that. But he's a dad, so there's some relatable humor. What's that?
What's the book about?
So he's got a book. I think it's new. It's called We're All in This Together. I just started the other night. Oh, man. And he's like, oh, we all live, like, we're all different. But, in the place where you live, it's kind of your place, but you're a member of the community and you have to do the best, except if you're in Fresno.
Oh, man.
It's like, if you're in Fresno, I don't know why you live there. I was in Fresno and I walked around and, man, I just had to go back to my hotel because it's scary.
You know what? Okay, so maybe this was, I'm not familiar with the name. I'm not like, if you ask me like top comedians, I probably can name like 3 names if that. But there was an individual that I know was a comedian on Joe Rogan. And they both spent time just bashing Fresno because he said, he talked about how he went to a show. He had to do a show in Fresno and it was like the worst place ever. I'm not sure if it was him or if this was somebody else.
But this is Tom Papa, if you recognize him. This is the guy. Super funny Netflix shows. He's a buddy of Jerry Seinfeld. Whatever. He's funny. He's one of my favorites. I just couldn't believe what I was reading when I started the opening of his book. Now he goes on to talk about how nasty his apartments were in New York and San Francisco, and the punchline is like, where you live is your home. You're a member of the community, and you make the most of it. And we're sharing the space, even if you're in Fresno. And the cracks about the heat and all that stuff. But I couldn't believe, of all the freaking places, that he named where we live as the place for it to be the butt of his opening joke in his book. And I'm like, gosh darn it.
Add it to the list, right?
The book is funny, and he's a nice guy, and he's like, if he came to town, I would go in a heartbeat. Although the opening of his book makes me think he's not coming to town. I might have to go to San Francisco or LA to go see him. We'll see. I don't know. So anyway, that's what's on my mind, defending our own little hometown that's imperfect, I will admit, but has a good restaurant in Saizon. Yeah. So there you go. Well, good. Well, we'll leave it there. Ryan, we're going to try and do 2 weeks from now if travel schedules permit. If not, we'll do 3 weeks from now. We'll just wait and see.
Yeah, very sounds good.
All right. Well, until then, have a good couple of weeks.
All right. See you next time.